Okay. We own.
We are live.
Okay, I want to welcome everybody to the Unconventional Wisdom CSC podcast and Macro Moment Trading podcast. So far, it's just Micah and myself. Randy is in a baseball game today, some major tournament. He's been in most of the week so far, and he was pitching yesterday, and they actually won the game. So I told him we'd root for him. So everybody go root for Randy. Root, Randy. There you go, Randy. I told you I'd do it. And we already have a note on there. Good morning. We would encourage you to type us notes if you want to ask myself and Mike any questions. And Keith should be on here a little bit later. Tony will not be able to be here. He had a previous appointment. So we would appreciate any notes so we can have something to talk about, I guess. Major news today is Charles Schwab is in talks to buy TD Ameritrade. I think this past talk stage, I think they've actually done it. The two largest online brokers. I couldn't believe these assets, but TD Ameritrade has 22.4 billion, and Schwab has 57.5 billion market cap. And it's just incredible stuff. Trillions of dollars of people's money for both those accounts, several $1 trillion. Anyhow, we projected this would start happening several weeks ago, months ago, actually, that the larger firms, the Wall Street firms, Chase is already in the process of dismantling their operations, spreading it around the country, and they will say it's not like it used to be in the brokerage business. It's not going to be like it used to be in the brokerage business. And I imagine now we'll see another rash of big online brokers combining, which is what we predicted some time ago, along with the fact that they'd be going no commissions. So just whenever I predict something, it's sort of like some kind of like, what do you call those guys that predict things? Predictors, And
Forecasters, yeah.
Forecasters, there you go. Yeah, forecasters. We've had a good day in the micro moment trading. We don't have Randy on here to talk about the more conventional covered calls and various things that he does. And we'll delay that until next. Well, we won't be on here next Thursday because next Thursday is Thanksgiving Day, so we will not be here. So mark that down on your calendar. Don't miss Thanksgiving lunch or anything like that just because you wanted to watch us and we weren't there. So Micah, what did we do today? I know we made about 25% on our 25.5% on our morning session of the micro moment trading, and for the week we're up. If you add that, 44. We're probably about 70% the week. Stat more goes, so we'll probably hit over 100. We normally average for the last. Tomorrow will be the end of the 27th week, and we have averaged over 130% each week for the last 27 weeks. We've been doing this a lot longer, but that's when we started the subscription service. It's 27 weeks ago. And so poor Micah sort of doesn't feel very good. He's got something I've had for the last couple of weeks. He's now getting rid of it, some kind of flu type stuff. But we're going to force him to say something.
Yeah.
About today's micro moment trading was really kind of a great day. There's Keith. Hey, Keith. Welcome, Keith.
Hey there.
How you doing?
Good.
So, Michael, why don't you go ahead? Keith, Randy is, you got to root for him here. He's at his baseball game. He's pitching yesterday, and they actually won the game.
Well, good.
Like I told him that we've got everybody rooting for him. And so, also before we turn it over to these two guys, if you want to go to our website, www.micromomenttrading.com, it has everything was on the OCSE website is on there, so you can find out everything, all our various programs, events that we have, and you see all the emails that people send into us during the course of the week and the answers that these folks give back to them. And so you learn all kinds of stuff, what's going on, how people are doing, what kind of money they're making, and so on and so forth. Also send out a daily micro moment news trading page that goes out after the first session in the morning. And send out yet because we have this podcast that interrupt that. But and it's got all the trades for the day and stuff like that. But Keith, you're not going to be the main voice because Micah has sort of what I've had the last couple of weeks. and he's not going to be able to talk. But we'll rally him up about something, and you know how he is. Once he starts talking, he stops.
I know he does.
So, we can address the questions and whatever. So Keith, I know it's been slow in the area that you're in.
Yeah. But I've been doing some good things. Again, I run the weekly credit spread platinum service, and been testing some new longer term trades this week, and closed one last week for about a 30% gain. So I'm looking for real trades now. I've done paper trading and looking for doing real trades now. And the charts are just waiting to reset. They've been in an upcline, but anything to open at this point in time until things turn around here was going to be just continuation mode, and I don't want to do that. I want to try to do momentum trades using the credit spread techniques. And so just waiting for that to turn around. It sort of looks like maybe things are heading in that direction today with the pullback, that the charts are definitely getting down to the medium to medium low range on their upward channels. And that's going to be an ideal time to open a new position. So probably not going to happen today, but maybe tomorrow or Monday we'll go ahead and open some new trades on that.
Is that this new technique, or
yeah. It's not totally new, but it's slightly new, Joe. Yeah, it's just a sort of a modified version of what I had been doing, just going out further in time. So right now I'm looking for either January or February monthly expirations on that.
Okay, good. Well, that's good news, because those returns that you've had so far, pretty impressive.
Yeah, I've had great ones on the last run up. That was, I guess, I totaled about 400 some percent on those run ups, and then had a couple other good ones that turned around again that were about 100%, and then last week was the 30%. So again, just now waiting for that turn up to go back up, and I think it'll be a good situation to be in.
Okay, great. Okay, excuse the cough.
Hey, just a second. I'm going to turn on my antivirus to make sure it's on here. I don't want to catch what you guys are getting out there.
Yeah, I'm pretty sure
I'm trying to mute it out. This last couple of days ago, when we were doing those sessions in the morning on stuff, a couple of days there, I couldn't hardly talk at all. And but fortunately, today of all days, Micah got struck with the same type of stuff, and he couldn't talk, and that was sort of a pleasant surprise to everybody,
Well, Tony was just happy as a clam this morning. He was just going on and on and on. So.
Killing it, yeah. Joe asked me how it went today. I was going to say it was fun to watch.
Kind of explain what went on today, so what people can expect, because like yesterday you had a good day, and but today it was just really active. And what causes that activity and all that stuff when you're doing micro moment trading?
Yeah, of course. So we see a lot of different effects happen on the option trading, that because it's not bound to it's not bound directly to the stock. The buying and selling of options is its own supply and demand. So there's things that happen in the price fluctuations that are not exactly representative of the stock, and you have to keep that in mind. So that's why, some days you'll have really great trading on Triple Q, but not so great on Apple, or great on Apple, but very lacking on IWM, such and such. So that's why we try to keep the ability to be able to trade multiple things. But we were seeing a very low rate of movement on the option trade for Apple. Honestly, the last week it's been like that. So you'll see the stock move, and obviously options have a delta. They have a 50-cent delta, something like that. And you should see the option move half as much as the stock, but it's not even doing that. We've seen 1 to 2 cent moves for a 20-cent stock push. So making it very difficult to trade, and we're still squeezing them out here and there. But it's been pretty calm in the realm of Apple, and Triple Q is keeping up with the movement. But we've just been. It's all part of the cycle, right? We play the marathon, not the sprint, so we have to be aware that in the slow times that we're still doing good on the year, and kind of have to be patient with that. So
I always get amused and probably Keith has noticed this too, when Micah and Tony are on that first session in the morning, it just seems like, whatever it happens to be doing right at that moment seems to just get them all depressed, like they've not done anything. This will be the end of the 29th week. At the end of the 28th week, which was last Friday, they were up 3,699.74%. Now, I've never seen, and I don't know, Keith, if it's some kind of mental thing, they'll be talking, they just get totally depressed. Oh, man, it's such a bad morning. Oh, man, all this night. It's just like, and it's all it's kind of depressing to be on there, actually, in a little bit, because they're back and forth like that.
They're so jaded with these great returns that if they only get 10% in the day, it's a great day.
Yeah.
But I'm telling you, Micah, one of the best things you guys can do is a day when you don't trade, because you're not forcing it. It just isn't right. And a lot of times on Mondays, that comes out on you guys, and that's disciplined trading too. So.
Yeah, no, it's very true. Keeping that in mind, and also keeping managing the expectations of clients, because they see that and they're like, "Oh man, this is going to be so exciting and it's fast paced." And you got to kind of realize, there's some days we don't trade at all. You guys got to settle it down. Don't be too excited about all that. So.
And then just when you think it's really slow, like this morning, then all of a sudden, bam, 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 you just have a bunch of them come in. So
what really gets them depressed is because we've got where they can talk to us, with chat stuff back and forth, and the clients start doing all kinds of really good stuff, and they're just sitting there. Yeah. They're not doing anything, and the clients are seeing all these wonderful things that are going on, and they're just sitting there.
That's true.
They have a bad. Well, remember, it's 6% a week. 6% a week in 24 months. You've grown 2,000 to about $850,000. At that point, you start taking just 1 week's worth of income. 6% of 800,000, about $48,000, $50,000 a month. Got that in 3 weeks, stay in there and keep compounding. So when people say that's not possible, let me. And I know Keith gets started to talk about this, but the first seminars he attended, he was a speaker because he had grown his account to almost 1,000% in the 12 months prior to that seminar.
Yep.
1,000%, but the last week he missed it. He missed it. It was 950% or something like that. And so we still show every now and then the actual brokerage statements to show that now who ever heard of anybody doing that?
Well, and I was just like Tony and Mike is like, oh, I only got 940% or 50%.
Yeah, it's just like some kind of psycho session with them. There'll be 1 minute, and then something doesn't happen for like 5 minutes, and they're depressed. What's going wrong with the market? So, yeah. Anybody have any questions? We should type in there and let's say hello to you at least. There's somebody. Martha C. Won't you? I'll read it because your voice there. Great day of trading for me today because I followed Joe, Micah, and Tony. Forget them. Teachings. Thanks, guys, for changing my life. Happy Thanksgiving. Martha just does fantastic. She's there every day, and it really, really does well. Martha's been with us a long time too. There's a fellow named Tim. Now, Tim is sort of an escape artist. Tim gets on there. In the first opening sessions, and he'll do trades, and then he just loses. He says, "I'm gone, guys. I'm through for the day," and he's up 11%. In fact, I've got it in that report I send out daily. He's up 1,115% over the last 16 weeks. 16 weeks, and he had a tough start. That was before we knew he was a cut and run guy. What a tough start.
Yeah, no, he's been doing really amazing. He has.
Yeah.
Every day. Yeah, really good trades, really solid trades. Great losses too. Keeps his losses nice and tight. It's not like he's, those numbers you have concern of maybe that's somebody that just swings for the fences every time, and it's not the case. He shows us his losses and they're great. So really solid trader all around. He's doing amazing.
Yeah, what's unique about that particular way of trading versus all our other ways is there's no management to it. You learn how to get in based on the interpretation of the chart that comes when you subscribe to the service, and it's a really unique chart. It costs a lot of money to spin around, and we've modified it many times. It's in for some more modifications now. It tells you when to get in, and it tells you when the thing's getting ready to go wrong, in which case you get out just like that. You don't hang around hoping that something will happen. And many times, like today, I know Tony had a couple of transactions. He closed out for like a penny loss, and other people reported a few minutes late some pretty good gains. But it doesn't make any difference. It's when you end up getting those huge losses, 20-25%, you can really wipe out a lot of value there. But that's the whole thing. There's no technique you can do if it doesn't go right. All the other techniques, Keith's techniques and credit spreads and all that stuff, and this new technique and everything that Randy has are, the rules. You got to follow the rules, and you never let a deal turn. A deal's going to go whatever way it's going to go. Using those techniques, you have tools to keep making your weekly returns based on what you paid for something originally. If you originally got 5% for it, based on a certain price, the price goes up or down, you're going to be able to. If it goes up, you're going to get more. If it goes down, you're going to continue to get at least your 5%. So you can really compound money, because most stocks don't go out of business; they go up and down though. So the key is to keep making that monthly income. For the micro moment trading, you're never in a transaction for more than a minute. That'd be a long time, and certainly never overnight or anything. So, but there's no management. You're either in or you're out quick, because a lot of times you're in. The second you hit that thing, you've already got a 3 or 4 or 5% profit, which is substantial. That's 4 or 5%. You're just paying $1 for the option, and then you're out. And the key to it is how to get out. And I noticed that the people that attend those sessions have really gotten good at getting out. You don't have anybody with huge losses anymore. 10 or 15%, like it's 1%, 1 cent, 2 cents. There's Frank. Why don't you read that, Keith?
Yeah, it says, in any idea what caused the $2 drop, and it went away there. Oh, and then Ken replies, yeah, China trade news. And let me say, I think it's China trade rumors. Everybody's trying to look at the crystal ball and guess what's going to happen in China. And some of these big, some of Joe's favorites prognosticators on CNBC are probably say, oh, yeah, it's going to do this, it's going to do this. Well, then it just goes and just does the opposite. They're trying to guess.
Yeah, I came in a couple of weeks. I came out in the editorial last week. My prognostication, my next event, is that CNBC will be going blank, because they, except for that early morning show, like those guys that are on there, the very first ones that come on, the rest of them just talk old stuff. They don't recognize anything's changed over the last 50, 70 years, anything. And they still, and particularly the guys that do their options, those are two idiots, complete idiots. I mean, they're speculating in options. They're buying, we bought this, we think this is going to happen to the company, and this is going to happen to the company, and the world's going to do this, and that's going to happen. And we're going out 6 months, and we're doing that. And except for that first morning show, they're worthless as hell. And particularly that idiot Kramer. I mean, he's always been worthless. And they're just getting old. They don't recognize anything new. And you could tell that they don't, because the way that they value it, the way that they talk, and the way that they say this is, I put money in this stock, so on and so forth.
Joe, I got a story about Kramer too. Okay. A small company that I used to work for was really doing some very innovative stuff, and I guess through the reporters and it's all, Kramer got wind of it. And so he says, oh, this is a great thing, the greatest thing since sliced bread and all on optical signal processing and all. This is definitely a big buy. What happened to the stock price? It tanked. Just did just the opposite when he mentioned it. So it's like, man, just don't mention our company again, Kramer.
Yeah, I mean, it's incredible. Well, here's Gary. Gary says, what unique characteristics of Apple and QQQ make them ideal for micro moment trading technique? Okay, it's a good question. When you're picking something to trade micro moment, you want to pick just a few things like Apple, QQQ, Microsoft, and just stick with them, because they develop a pattern, and it's sort of like watching a kid grow, and you can kind of sense, to some extent, you can kind of sense what the stock's, which way it's heading, and so on and so forth. You want one that has a lot of volume. That's Apple and QQQ have a lot of volume. And that's what you base that on. We don't really care if Apple makes any money or makes a ton of money. We don't care. QQQ is an index, so it doesn't make any difference. But you just want a stock that trades a lot, so you got a lot of volume there, and money value in the options that they're trading, shares that they're trading. That's all you're really going for. It could be anything.
Yeah, the other big thing on that is too, you really want a really tight bid-ask range on the prices of the option too, for the quick moves.
Yep, exactly. So Gary, I hope that helped out there. But that's a good question, because a lot of times, this takes out the whole thing about why we like macro moment, is because you don't have to ever worry about, hey, you wake up in the morning, the market's going to do what it's going to do. It makes no difference to you, because you're going to go either way it goes. You're going to go based on what that chart tells you to do, and you don't have to worry about stocks. You don't have to worry about researching stocks, and you're using stocks that are going to go out of business. Apple's not going out of business anytime soon. QQ certainly not going out of business. You can use IWM; it's never going to go out of business because it's an index also. Okay, why don't you read Roger there?
Yeah, I have a Roth IRA at Schwab. Can I use this account to micro moment trade? Yeah, you absolutely can. All the same rules apply with a Roth. Like nothing changes on that front, but anywhere you can buy a stock, if that platform has the ability to buy options, which I believe all of them do, then yeah, you can. There may be a better platform out there, but as we were talking about, Schwab just bought TD Ameritrade. So you'll probably be able to load up within the next couple months, you might even be able to load up your Roth IRA into the Thinkorswim platform, and actually have a much better platform to trade as well. Anywhere that you can buy options, you can micro moment trade, but you definitely get an edge from having a very good platform.
And if you don't, if you're not trading micro moment, you can do it virtually with the virtual trading platforms. That way you can become an expert at it with never risking any of your retirement money there. And also, we have on the YouTube a number of sessions that these guys do, and that micro moment sessions. So you can set through one that's a real session. It's just recorded, so it's good to trade off of because it's old information. But you can see exactly, precisely how they're reading and interpreting the charts and stuff. And then go out there and open one of those accounts, and before you can put your IRA money in there, just go ahead and open up an account, and they're going to charge you, a few bucks, $100, $200. It's your money; they don't take it, but they want you to put it in there into an account, and then they'll let you do real time trading without the use of money, virtual trading. So, okay, good question. Anybody have another question you want to ask? If Micah, didn't have a bad throat, I'd make him do a karaoke thing.
But yeah, really good. I want to highlight some interesting thing that happened yesterday too. Tim, who we've talked about a lot on here, was able to make a pretty phenomenal trade on yesterday's drop. And that's the nice thing about micro moment trading is it's built for the consistent long-term, the marathon. So we say, and it needs to be consistent small gains over the long term. But at the same time, you shouldn't necessarily be cut off from making big gains. So the first comment today that we got, let me pull it up here, was from Tim, and said, hi guys, don't know if anybody caught that triple Q drop yesterday at around 12:30, but I bought Q strike put at 150. No, sorry, tipped a little weird. Strike put 150 Q at 150 contracts worth of Q at 70 cents. It went to 195 in about 30 seconds. Grabbed $1.10 in profit on a 70-cent buy. Yeah, so I mean, that's what, 100 and 150% there, and it's like
Yeah.
the ability to do that when your main mission still is make 3 to 4% per trade, keep your losses really small, like 1-2%. That's the game we're playing, right? Very small trades, but the technique itself and how the charts read give you the ability to get into some monster trades as well. I mean, on the webinar, I know Tony and I have done multiple trades over 20% return, 30% return. There's been a couple 40% returns. So having that hybrid ability is really important in a technique, unless you do multiple techniques and you have something to kind of fill that gap.
Yeah, that's exactly right. I think the other thing is like when they say, "Hey, I made 5 cents," people say, "5 cents." Yeah, I make $5 on a trade or something like that. Okay, that's $5, and based on the dollar, that's 5%. So you do it. We get reports. People listening to us. I just did 6,000. I just made $6,000. I just made $9,000 on that trade. Well, that's a lot of money for a trade. And if you just follow these guys, I mean, they're doing. There were 6 or 7 trades today. A total of 25.5% roughly. Yeah, 25.50% over 6 trades. But they were like 6.45, 4.59, 4.48. There was one small loss of 1.43%. It just goes on and on. Martha, can you do that with a 401k? I'm not so sure when you say can you do that. I don't mean if you mean do it virtually. I'm sure you can. You can use this micro moment stuff in a 401k. Here's the problem. If 401k is a company's and it's not your company, it's managed by somebody else, they're not going to do it because they're not going to do that kind of stuff. They don't do that. So you have to do it yourself, which means 401k has probably got to be either a company that's your company or something like that. Yeah, it's a 401k is just another retirement plan, and you can do it. Frank, Mike, go ahead, Mike. That's addressed to you.
Did you learn anything from giving the Micro Moments seminar that you are now teaching in the webinars? There were definitely some aspects of understanding more how the students gain information, if that makes sense. So there were some clarifying points of what really helped people to learn, and the types of visuals, the types of speaking that caused the most retention and the most understanding from the clients. So there wasn't really anything necessarily new with the technique, but I would say there's been a lot of kind of subliminal changes in how we speak, how we explain things, because we did a really cool thing where we put out this survey and we were able to get everybody's written opinion on what they thought and what they learned from, what they didn't, what could be improved, and that was able to give us a lot of headway into really understanding what how people are learning it. And everybody has a different learning style, but there's still a majority. So yeah, probably we're speaking in a bit of a different way and highlighting different things and being able to go over the basics more often so that people learn better and retain it better. So that's probably the biggest change from the seminar that we've had.
We're going to have another one coming up in March. We don't have the definitive date yet. Dirk's working on all that stuff, but we'll be here in Fort Worth just like the last one. But we kept that one small, kept about 25 people, and it was really great. We didn't even have it online. This next will be online and in person. And then we're also working on one of our other events, like a master's class or one of the other ones, and where they'd be here and online, and much more variety of presenters like Keith and Randy and so on. So covered a lot of stuff. But okay, if you need to go to again the www.micromomenttrading.com website and sign up for the free cow report. It comes out every Friday, and it's been published for over 20 years now, and it's got all kinds of good stuff in it. You can on the website you see what we do, but the website didn't have all my email. The cow report has email from these guys as they address those comments that you can't normally do on the website. So, okay. Do we have any more questions? Hop in there and we'll get them out of the way before we sign off. Mike, I hope you get feeling better.
Yeah, same. I'll watch some movies today and eat some soup, and I'm sure it'll be fine.
Okay. Oh, here's Martha again. If 401k is with another company, would you have to withdraw the money in order to trade it? I guess you mean, I'm not sure when you say with another company or if you mean another brokerage company. If you're going to trade it, it needs to be switched over to a Roth or something like that. Now I don't know if they still contribute to your 401k. If you've left the company, they're probably not contributing, in which case there's no reason to have it there. You can put it over into another retirement type fund and manage it yourself. Do not ever withdraw the money thinking you're going to withdraw that money tax free and put it into a new IRA or whatever, because they're going to tax you. It's got to go institution to institution. It's got to go from where it is now to where you want it to go, but just between those two entities. Don't you?
Yeah, I think they call that rolling it over. So, but the whatever company you're going to transfer it to, they can handle the paperwork, so it's not taxable if you roll it over.
Yeah, they do the whole thing. So, okay. Any other late messages? Not what for the day. It's been about our normal 33, 34 minutes. Okay, well, thank you, Keith. Thank you for being here.
Okay.
Oh, Keith, it's 72 or 3 here right now.
Is it really? Isn't that nice? There was a nice frost everywhere up here this morning.
Got on my Puerto Rican stuff. Now, tomorrow, it's only going to be 50, so we got a cold front coming in tonight.
Oh, boy.
So we'll see how it goes. And Micah's going to be traveling back to his hometown over for Easter. Thanksgiving, for Thanksgiving. And he says it'll probably be 10 degrees. In Billings, Wyoming, 10 degrees.
Not looking forward to it, that's for sure.
Okay, thanks. Thanks, everybody, for attending.
All right. Everybody have a great Thanksgiving.
Check out the website, compoundstockearnings.com or trading.com. They're both the same now. And
so, Joe, no podcast next week, right?
No podcast next Thursday. Absolutely true. Yep. So,
if you show up, Marcus, you're the turkey.
Well, don't worry.
thank you, guys. See you later.
All right. See ya.
Thanks.